Hello, Oracles! Oracle Tim here from Oracle Investments. Today we're going to go over part 4 of our 5-part series, Tesla Stock's Exponential Growth Potential Explained. Now to continue, as what I had said yesterday, is the further on you go with this in the future is the wider range of possibilities there are. A lot of these things may not come to fruition. There may be a lot of things that we don't even know exist yet that may come into play. So based off of the knowledge that we know now, I have put together my insights for what the future could hold. And also, I am not a financial advisor, so the stock prices that I give on here are my own personal price targets. They could be way off whack when we get there. Again, these projections are super far out, so don't hold me accountable to these. It's just my insights. And like any wise investor, my insights can change as time goes on. As we go further forward, my valuations change, different things with the company change. My price targets can also change. So today we're going to discuss 2028 and 2029. Big changes that are going to come in 2028, which may even come sooner, will be just the further advancements of EVs, batteries, and all of that technology, which are just going to put ICE vehicles in the past. It's not even going to be worth it to purchase an ICE vehicle because they're going to be old and require maintenance, and EVs are just clean and more efficient and affordable. And one of the huge things to factor in when it comes to the stock price itself is a lot of manufacturers have employee incentive plans, whereas the better the company does, the more the employees make through their stock incentive plan. Tesla does this extremely well, and as their factories grow, they're going to have more and more employees who are really trying to drive the company better as well. And this is one of the major factors of the exponential growth for the stock price. So the more factories that Tesla opens up, the more employees they have. The more employees that they have, the more they try to drive the stock price up. The more they try to drive the stock price up, the more it goes up. And that's really a huge piece that's going to drive their stock price higher and higher as the future goes on. And now in 2028, I see them starting to build their 9th and 10th factories. Locations, obviously to be determined, so much between now and then, but based on what they have determined to come up with 20 million vehicles produced by 2030, building their 9th and 10th factories in 2028 would make sense. And between expansion of all their other factories and the building of these two, their total capacity for production, it'll probably be right around 17 million vehicles. Now at this point as well, we're going to see a huge turn when it comes to cities. And people are going to be preferring robotaxis over regular taxis. So we're going to really see robotaxis becoming prevalent in cities. And due to robotaxis and just the efficiency of the EVs and the cost price coming down on them, we're going to see EV adoption right around 80%. And because EVs are becoming significantly more prevalent, we're going to see a bunch of these gas stations that were hybrid gas stations becoming just all charging stations. And people are going to be like, gas stations are dirty. Gas is going to be a business that's going to be losing money, so it's actually going to be a cost deterrent. So it's going to be a huge cost to gas stations to have gas, whereas charging stations will be making them money. So they're going to start converting their gas over to all EV charging stations. And as this is all converting and going forward, their energy revenue is really going to blow up and be about $7 billion. And at this point, margins are going to be holding steady right around the 45% mark. They're going to be finding that balance there, and I believe in 2028 they're going to start building their first AI bot factories. And it may happen before now, but I can see Tesla doing some buybacks on the stock. We've got a lot out there. I'm anticipating, at this point, including the split we've already seen, 2 more splits. So there's going to be a lot of outstanding shares out there. So we might see a buyback coming from Tesla, and that'll again boost that stock price up. And so with that, I see the stock price at the end of 2028 being around $600, which would be $15,000 pre-splits. And now we move on to 2029. In 2029, we're going to see those 2 new factories begin their ramp. And we'll see the total vehicle production at 20 million. That's going to be 1 year ahead of schedule, but Tesla has notoriously been ahead of the curve in their own goals, so I can see them hitting 20 million a year ahead of schedule. And at this point, where many of the legacy automakers have been thinking, 2035 is the date we're going to convert to all EVs, they will see the writing on the wall long before then, so EV adoption rate will be around 90% at this point. And energy revenue is going to hit 10 billion. This is really where that exponential growth is going to start coming in, where, you know, the whole infrastructure when it comes to powering our world is going to be changing over to solar, wind, more green energy, and we're going to be seeing a lot more of that converting as we go into 2029. And this year is also the huge year where the AI bot begins its production. And this is going to be really another huge stepping stone jump off point for Tesla, as the AI bot is going to revolutionize how we view labor. And with the AI bot factory done and them producing them all right now, that means they have an opportunity to really boost margins even more. So they'll have, you know, their AI bot factory done. They're going to have 2 more vehicle factories done. And as we have seen with Shanghai, and what will hold true with the other factories, is once the factory build is done and the initial ramp starts, that's when margins really take off. So margins will be pushing up to 46%, maybe a little bit more. And with the excitement and news behind the AI bots coming out and just the potential that they have, we'll see a boom in the stock price, and we're going to see a 4-to-1 stock split. And I will see the stock price at this point being $200 post all 4 splits, which would be equivalent to $20,000 today. And a huge piece of what's going to go into this year is going to be, I think at this point, Elon has said that, you know, as long as they have something new that they are working on that they can invest their money into, they will not do dividends. I'm sure they'll always have something, but at this point, Elon will have probably stepped back as his role as CEO. He won't have as much pushing forward as far as, you know, new technology going on. They'll have the AI bots coming out, and so they might just be issuing dividends at this point. Let me know in the comments below what your insights are for 2028 and 2029 as far as Tesla goes. Do you think that at this point they will be doing dividends? Do you think that they're going to do dividends before this? Let me know in the comments. And do you think Elon is still going to be CEO at this point, or if he will have a different role? Thank you all so much for watching. If you have not subscribed, please do so down below. If you are in the US, happy Thanksgiving to all of you. And to everyone else around the world, I hope you have a wonderful day. Thank you so much.